key investor Arcolios, which has had to dump lots and lots of shares late on Friday. 20 million out offloaded for Viacom CBS shares in particular, and also we've had some big Chinese tech stocks also having to load those shares they'd held as well. So all to do with leverage, all to do with margin calls. So very significant situation there. The other key news really that's helped markets or moved markets this morning on the Asian session and the European session so far has been the refloating of the Evergreen container ship with hundreds and hundreds, thousands of containers on there. So they've straightened it up, and the Egyptian authorities have managed to get it moving. So that's obviously had a big impact on the oil market this morning. But the other key news is sterling is moving. Credit Suisse and Nomura are also exposed to the shares in Viacom and the Arcolios capital setup. So significant moves on the equity markets today. So usual situation with our setup here. So let me know if there's anything you want to have a look at. Nobody's actually put any chats in yet. But say significant sort of balancing of equity portfolios last week, as we saw. Anyway, we had a strong finish on Wall Street on Friday. The VIX was down at 21.4, down 4% for the day. It's bounced back up so far in futures trading, 22 plus, so back up the 3 and a bit percent. All on this worry about the ripple effect of these banks and the exposure to this hedge fund run by one-time what do they call him? Tiger Cub. He was a protege of one of the big Tiger funds back in the late 90s. So big sell-off on the markets there. So let's have a look where we go. So this is what we're starting with. This is the sterling pair cable. Strong start today, cables, I say, on the bid. We've got England reopening. England and Wales opening fairly significantly today. Scotland's still in some sort of some restrictions. We can meet people in the UK, in England. People of groups of 6 can meet from today with one other household, so it's helped sterling. The other key move today has been the euro pound, where we've had significant moves. We're down to where's my euro pound pair gone? It's disappeared. Where's my euro pound gone? It's disappeared. I've got the wrong setup here. That's why. Moved down significantly. Where's my euro pound? Let's just move that down. No face, Andrea's saying. Apparently I disappeared, but I'm back now. Don't worry, guys. I'm sure you've not missed me. Euro pound here, very significant move this morning, down towards testing this key level here. This big fat yellow line here is 85. So consecutive 4 or 5 hours down for euro pound. Obviously, the situation in the euro area is rather the vaccine and the virus is a complete inverse of what's going on in the UK. Cases are going down in the UK. They're still going up. Lockdowns have been extended in France and Germany, and particularly Eastern Europe has hit quite significantly. So euro pound down. If we zoom this up to the weekly chart, it's a bit messy, obviously, because this is the 1 hour chart, but you can see if we zoom that in, you can see this is the weekly chart for euro pound. So we're moving down ever since the Brexit deal was struck towards the end of last year. And 85, this big fat line here, takes us all the way back to February, last week of February 2020. So 1 month or 1 year low for euro pound. So there's no questions coming in here, which is a bit of a check. I don't know. Perhaps nobody's here. Who knows? Oh, hang on a minute. This is because I've only got YouTube guys here. Let me just check if there's any Facebook people here. Let me just watch that one. So, say pound, big mover today, or significant mover, over 0.5% or close to 0.5% down for euro pound. 1 hour chart. Another big mover I looked at today There was one from Friday, which was the Aussie yen. Why are my charts all mixed up? My charts are all mixed up on this workstation. Oh my word! Let's just try and sort this out before we go any further. Let's just get this sorted out. No, doesn't want to do that. There we are. Now I'm in control again now. I'm sure you didn't mind, but I'm in control. So let's have a look at if we got any Facebook questions. Let's have a look at that. Nobody from. There we go. I can see what we're doing now. So let's have a look. Right, Mizu's asking about the Aussie dollar. I've only got a couple of comments. Hi, Stuart. What is your view on Dow Jones and gold? So let's have a look. So Dow, which is obviously the USA 30. So a USA 30. Gold, really gold, Muzi is just really sort of sliding sideways, still biased to the downside. It's got no real direction. Again, the markets have been obsessed for a week, obviously more than a few weeks now about yield. Remember, the gold has no yield, and so it's really shifting focus. The churn out of the tech stocks into the more value plays, that's continued. That was clear from the data. Some data that was produced on Friday, and Aussie USD is also what you've asked about. There we go. Let's have a look at those three on Friday. So the tech stocks sort of, there will all be investors. There will always be people chasing tech stocks, but certainly they've lost a bit of their sort of positive vibe. So USA 30, let's have a look here. I've got the JER 30, there we are. So dollar, the Dow, over 33,000 in close on Friday. Very, very significant. And this closing candles on Friday is very significant as well. Listen, remember, this is a futures chart, not the actual cash chart. So this is the CFD of the USA 30, but here into close on Friday, big strong close, big strong candles, the same across the board for the other two major markets, the USA 500 and the USA 100. Cooled a wee bit today, but remember what we always say about candles. Candle body size is important. So this is just a 1 hour chart, but very strong close into the close of the week. Lots of repositioning with regard the quarter end, which is within a couple of days as well. So that's significant. So that remains relatively well bid. So that's the 1 hour chart. The 4 hour chart here on the USA 30 also bid. Cooled a wee bit, but there's the 20 period moving average here for 4 hour trade. It's down at 3270. The 50 period is there at 3270. So we want that back above the 50 period here. So we'd like to see the 20 period move over this 32750 area for 4 hour trades and move up and push again these testing for new all time highs over this 33,000. As far as the daily time frame is concerned, you can see it's been long for most of March. Here was the last big candle here from this low on the 5th of March, and it's rallied all month, basically. Ran into 33,000. We dipped, and now we're back up. So this is, lots of people are arguing, well, this is the final buying frenzy. We'll see. The intraday high in March has taken us to 33,215. So that's a line in the sand, which is literally where our R1 sits today. So here on the daily time frame, R1 33.2 is the next line in the sand, but that remains bid. The 20-day moving average is all the way down there at 3236. So nothing to panic about just yet. It's still relatively well bid, and so are most of the other equity markets. There has been this churn out of tech stocks, which is why the Dow's benefit. Remember, the Dow, Muzzy, is only 30 in mainly industrial stocks, so it's benefited perhaps the most from the churn in the rebalancing, the quarterly rebalancing that lots of portfolios do. That's the Dow. You asked about gold as well. Stephen's also asking about the Dow and the gold. So Stephen, I hope that's answered your question as well. So let's have a look at gold. This is gold on the 1 hour, drifting lower again today. S1 today sits at 1723.50. We've tested it a couple of times, but that's been short for most of the day. When I say short, I mean it's under its 20 period hourly moving average and the blue line here, which is the 50 hour moving average. So from 7 o'clock this morning, server time. I hope you're all in tune again. Remember, we've had 2 weeks where we've been out of sync with the United States. because summertime arrived in Europe over the weekend. So we're now back with the major news announcements out of the US, typically at 15:30 server time, so 20 minutes. But there's no news today per se, just really that news that ripples on about the hedge fund, Harry, that has had to unwind lots of positions and huge block trades on Friday afternoon. Really caught the attention. Lots of great articles. Have a look at the Financial Times article that was broke it. Bloomberg is the Bloomberg and Reuters on .com. Both of those sites have it as well, free. The Financial Times is behind a paywall. But 1724 today, S1 for gold, getting back to gold, is 1723 support. So trending down now on the 1 hour. The 4 hour, guys, is it's been trending down as we've mentioned before, and it continues to test lows. And if we look at the daily time frame here, if we zoom this up, we had this big move down into this 1685 area. That's a key line in the sand for me at the weekly time frame. But really, the daily, see here, we got 1, 2, 3, 4, 5, 6, 7, 8, 9, really 9-10 days, really lots of that sideways action as the market is focused on the yield curve, focused on the non-yielding gold. So gold's under pressure, and we're still sort of pivoting around 1700. So we're relatively significantly over the 1700 level, but we can't break higher. We can't break over 1745 where we were last week, and it's sort of still sort of sideways. So there's no real strong trend on the gold market on the daily time frames. Okay, and what was the other one? That was Dow, gold, and Aussie was the other one as well. Aussie has had a really good run. Bathuzu, we'll come to Bitcoin in a minute. Don't worry, my friend. So let's just have a quick look at Aussie. Aussie, let's go the other way around. Let's go to the daily time frame. Aussie remains relatively well bid, although again, it's had another one that's had a weak March with the resilient, the remarkable strength in the dollar for the first quarter. So here, big line in the sand here, this big yellow line here sits at 78. We got over 79 into the end of February, and since the two tests or three tests of 78 this month, we've descended. So we got we got our test here at the beginning of the month. Here it was mid-month, and here we got to about the 18th. Final, no more buyers, couldn't hold and close over 78. So the pressure then was down. So we had that big sell-off last week here where we went under 77 again, and we continued down. And last week we found a floor around 75.50. So that's our floor going forward, 75.50 for the Aussie. There, that was that last week. Thursday, Wednesday, and Tuesday low. In fact, we went a bit lower than that, but 75. What's that? 75.60. In fact, that was higher, wasn't it? I'm talking about 75. 75.80 that close there. So 75.80 is our line in the sand. 20 pips takes us to 76. So that's the big round number, which takes us back to the beginning of February. So 76 itself. We've moved off that, but here the daily remains. Having rejected here from the whatever day that was, the 18th, that's been short, rejecting the 20-day moving average now for 6, 7, 8, 7, 1, 2, 3, 4, 5, 6, 7, 8 trading sessions now. So the 20-day moving average to take this back to the north needs to breach 77, or a little bit above there, but 77 your key breach up, and then 76 the key breach below, and then 20 pips below that to keep going lower. So Aussie sort of bias to the downside here against the dollar. Intraday, let me just go back to the intraday one, which is probably more interesting. If you don't put the time frames on, guys, I'll always default to the daily time frame. So anyway, this is the one at 4 hours we said it had been moving down. Sort of saw some action into the close on Friday. Week break over, it's continued to move. So that's moved up here on the 4 hour. The 4 hour needs to break R1 at 76.60 and then 77, and 1 hour will be positive today. There we go. It's rallied Friday, bit of a weakish move. I'm not quite sure what it's doing, but last move was down and up, and the last move was back to the upside. So it's the 20 hour is providing some sort of support there intraday. First resistance is at 76.58 where R1 sits for the Aussie, so it's still ticking up. Not a lot of direction from economic news anyway, moving the dollar today, but dollar remains relatively well bid. So here we go. Next up was Bathuzi was asking about Bitcoin. Bitcoin had a strong last week as dollar weakened. It's still weak, but the Bitcoin remains relatively well bid. Here we are, the 1 hour time frame. So we had a strong Friday. Remember last week we were talking about this 53,500 level, which we breached on Friday and closed, more importantly, on our chat platform here, closed above it. So that was a significant positive day Friday from the decline on Wednesday and consolidation Thursday through around this 52,000 here. And then what happened this morning is we gapped on open, so a strong weekend for Bitcoin over the 20-hour moving average this morning at 10 o'clock, so sideways in the Asian session. So support is here today, 55. Well, no, I don't know if it trains this in today, but support is here at the R1 level, 55,190 over the 200-hour moving average through R2 and through to R1. So over 58,000 again. So a close above 58,000, Bathuja, is a significant level. The reason I say that is we look at the 4 hour chart. See how we've last week and for most of March, we've been trying to hold over that, and we haven't really. And that's our all-time high again as we spiked to 60,000. So we go to the daily time frame now. You can see we're consolidating, but I'll zoom that in a bit. We're sort of consolidating a high. So we're really, this 53,500 level we talked about last week has been left behind for now. But remember, Bitcoin will be very, very volatile. And a close above 58,000 is positive to the upside, and that will nothing's inevitable, but we'll test certainly the 60,000 level again. So it remains bid. And again, another one, trade it like any other asset. The 20-day moving average for Bitcoin sits down here just above 45,000 at 45,670. So Bitcoin remains bid to the upside. Uga, Euro dollar C150. That's a great comment. Who knows? But certainly, Uga, as you say here, Sadat, we're trending lower, very much so. From consolidation in January and February, here the March levels, you see a big sell-off here. And again, another one that's been under its 20-day moving average for all of March, closed very weakly into February, I should say. Breached that low it tested into February at 120, and then so for March we've been to 121, but here we are under 118. So huge 300 pip plus move for euro dollar. Big monthly move. If we look at the weekly chart as well, that's been weak for most of the year. This is the beginning of the year, this line here, and it's been trending lower ever since. And the big move under the 20-week moving average was here towards the end of February. In fact, this one here. In fact, it was March, wasn't it? Not February. It was that that final week of February. First few days of March, and we've been followed that through under 119, under 118 now. 117 is the next sort of weekly support level back here. But as you can see, on these weekly candles, they breach that 117 and even test 116. So 116 is definitely a key support on the higher time frames. So 115, big round psychological number again, can't be ruled out. The key about 115 though, Sahat, is that's where the 200 day, see the orange line here, that's the 200 week, not the 200 day, but the 200 week moving average is. Before that, if we go back to the daily time frame, the 200 day moving average has already been breached last week. This is this orange line here. So we're moving, trending lower, certainly on the daily time frame, and 115, a big target on that week, end of week time frame, my friend. So hope that's answered your question. Stuart, absolutely no problem. Any further questions, please let me know. Prince, we just looked at gold. If you missed it, please stick it in here. It's 12 minutes ago, so I guess you must have done because you were. Oh, hang on, is that the wrong way around? Amir, good afternoon to you, sir. Stephen, good afternoon. Dow, we did, and gold, we did. I hope that's answered your questions on that. As I say, just go back to gold as there's nobody else actually asking anything, Prince, and I'm assuming you may not have been here. This is gold, Prince, on the daily time frame. I say it's lots of sideways action. I really want to see, or end of day traders certainly would want to see some sort of break from this channel here. The 4 hours had a bit more action. That's what that triangle was there. We broke out of that triangle. So again, traditional triangle um, traders, symmetrical triangle trails. The target from this sort of break of this vertical here would take us, down here somewhere off the chart under, 17. Where would we? No, in fact, let's have a look. Where would we go? So if that's our level there, from there to there, that's 3-2. We really broke out there, didn't we? So 3-2 from there will take us down here below 17. So 1700 really on the break of that triangle is a target for 4-hour traders, certainly. But it's really not going anywhere. But the bias, as I say, really remains to the downside. But we now spent 10 days consolidating, so there may be some support here through the 1725 where we are now. So absolutely, that's what I said earlier. The 16, you're talking about gold here, 1865. Yeah, the 1865 was the key weekly support here. This is that a few weeks ago. This is the weekly on gold. 2 weeks down here, that 1865. That's what that dotted line is here, guys, and that takes us all the way back to this key support here. See how that was the close of those weeks back in March, May, and May and June. End of May, beginning of June last year was that 1685 support, and that's where we tested into week. Remember, not the close of the week. Whereas here, this was the close of the week, and then it rallied all the way over 2000. Here we're moving down much more slowly, interestingly, as we've gone up. So really a bit of a consolidation phase and bounced quite nicely off 1685. So you're absolutely right, my friend. I hope you're well and staying well wherever you are in the world. Let's have a look. Quick, any more questions in? No, I wonder why the messages. View, it's all comments. View them all. Princess, thank you. Abaga says, good afternoon. Rosemary, hope you're well. Muzi, hi. Amir, hi. Now then, is that when I started? I can't remember how they all come in a bit the wrong way around. Let's have a look at them all. I want to see them all, please. Do I do? No, don't want to do that. Let's open it up. It's very strange when you look at yourself, but any morning from YouTube. Horan, good morning, wherever you are, my friend. I guess you're, good morning. I guess you're in Caribbean, are you, or Latin America or somewhere? Horan Rupa, good morning. Good afternoon, unless you're in, it's early. Is it morning yet? I've lost track of time. It's not morning yet in Asia, is it? It's New Zealand. Haran, anything you want to have a look at, let me know. So let's just go back to the majors. So until somebody asks for something more specifically, not a great deal of data today, but I'm here for another half an hour. So let's crack on. So yen, dollar's been bid against the yen. So we're over the psychological 109, and then last week on Friday we finally broke over the intraday high of the week, 109.20, and we a strong close on Friday for dollar yen. The other thing we found on the CFTC report, remember the Commitment of Traders report published late in the day in the New York trading day, we saw more yen short positions on the futures market. Remember the CFTC report, the Commitment of Traders report published on most, you can see it as simplified on most trading calendars. Is key to what the real market is doing, what the real futures market is doing. When we saw more short positions on the yen on Friday, so that's probably added to the rally into the close for dollar yen to the upside. So again, another one that you can see here quite clearly on this 1 hour chart. Nice consolidation. Recent highs here 109.78, so call it 108, 109.80 for the sake of round numbers. That's where the top of the Bollinger Band sits. And then R1 today sits there just off the top of the chart there at 109.90. So that obviously brings in 110. And this is, remember, this is on an intraday basis. If we look at the higher time frames, the 4 hour time frame, strong week last week. Big rally off this 108.50 through 109. There's our 109.20 resistance we had last week here. You can see that. That's our resistance here from last week. We were waiting for a break, and then a break, and then large candles. See again the big candles. A bit of a retrace today. but it's still supported here on the 4-hour time frame at the pivot point at 109.52. So again, 109.50. All these round numbers coming in. Haran's from Jamaica. Good morning, Jamaica. I don't know if you've been following the. I'm assuming you're a cricket fan from Jamaica. That's a very bad assumption, isn't it? But I don't know if you've been following England and India, but got beat again yesterday and lost the one-day series against India, lost the Test series and lost the 2020. So it's a clean sweep for the Indians and some fantastic cricket on that tour for England, both good and bad, but some great Indian bowling, some great Indian batting as well. But anyway, I diverge, and hopefully the recovery in the West Indians cricket team continues as well. Rohan. What was he talking about? Yen. Yeah, so yen spotted 109.50, and sort of on that 4-hour time frame. The daily we just looked at, consolidation and then breaking up. But again, another one. See, the 20-day. So I've always loved the 20-day moving average. Trend following. Obviously can be lagging, lots of criticism, but see how it found support, great support here all the way down in February, and the break over the 20 period was really all the way back here in January. So dollar yen has appreciated all year. It's about a great first quarter dollar yen. Surprised many market participants, but again, that's all just noise. What is the chart telling you? What is the price action telling you? That's what moves things. Where did the price close on a particular day? That's what the beauty of candlestick analysis is all about. So there you go, classic little rally up here for 4 days, ran into a big fat resistance at 106, down for 4 days, but not as, the low of that 4-day move down was less than, about halfway of the rally up, so that's still relatively positive. It went under the 200-day moving average, I guess it was, but then we broke through it, and then that day there, that was key because we were over the 200-day. It was over the previous resistance, which happened to be at 106, big round number, and we closed above it. So there, 25th of February, another tick in the buyer's box for dollar yen. Rallied, another big day there, 4th of March, and off it's rallied, consolidated during the middle of the month, and a strong rally into month end, into quarter end. Lots of yen going back to lots of yen selling. They talk about the yield on both sides of the Pacific. And there we go. Off we go. Anyway, first choice for you. How much gold today target? Gold intraday is just not, I can't get too excited about it, to be honest. First choice, it's sort of moving down. Key support, it needs to, if it's going to go lower here, right, there isn't a target. So, but what happened? What's technically happened with this trading strategy? Well, the trading strategy is not great because it's going sideways. There's a trend following strategy, this particular one. But again, let's ignore that. So what's happened? Well, we've resisted the 200. So your resistance today is just above the pivot point at 1731. Below that, we'd need to break 1720.30 itself. And then below that is a 200-hour, 50-hour at 1729.25. So 3 key resistances to the upside. To the downside, first choice, is the key support, which we've tested and held today at 1723. So that looks like that's the sort of area, if you think this is going to move up, where your stop loss needs to be. However, this strategy on an end of hour basis has gone short here this morning at 7 o'clock, and it's already made, or would have made, nearly 600 pips, which is 2 times the ATR. So a steady target with that, trailing your stop loss down today, would have already netted you ATR times 2, which is a target for many people. It would have been a target simply because that's where S1 is. So a lot of people would have been out of that now, and now it's waiting and going sideways. So it needs to break these key levels here to go up, and it needs to break that level there to go down, in my humble opinion, first choice. So that's my view on gold intraday today, my friend. Bruel, hello. Hope you're well. Hope you're staying safe. Haroon, unfortunately, I want to look at euro, dollar, and don't apologise, Haroon. Never apologise, never say unfortunately. Euro, dollar, and CAD against the CAD. Let's have a look. Any particular time frames, Harano? We just talked about the euro, and the trend is very much to the downside. Let's start with the higher time frame. The key thing was we breached the 200-day moving average last week. So here on the 24th, we opened and closed below the key 200-day moving average. That's a significant breach. This particular strategy, end of day, would have already been short from here because it's under the 20-day moving average here from the end of February. So it's gone down. That would have taken you out of the short position here as it's gone up, but you re-entered, chopped out there, so that would have been a losing trade. Then it would have last gone short here on the 18th of March. So 20-day was there. If you'd been trailing it down and closed out, gone short again there on the 18th, and it's still short. So it's and a big day last week as we went under the 20-day moving average. Under 118, as I said, for March, we were all the way up at 120 here, or just shy of 120. And at the end of February, we went as high as 122. Something wasn't 122.45. So it's been a very negative March for euro dollar, and it's still trending lower on all those time frames. 4 hour remains down, as you can see here. It's a bit more. Let's just change that there. Sort of finding support today at S1 perhaps, and even the 1 hour is chopping lower as well, running into the 20-hour moving average. That may be going long on the close of this hour, but still half an hour ago, my friend. So still relatively weak. And the other one, dollar CAD. All right, lots of comments coming in. That's good. So dollar CAD. Where's dollar CAD? I haven't looked at dollar CAD for a while. Dollar CAD here. Again, another one up on the daily time frame. Still trending lower, really. This is the daily time frame, but we may be finding some sort of support down. But we said this before. So the key line in the sand, 125, tested here at the end of February. We broke it in the middle of March, went lower, we've gone higher, and we need to close over $126 CAD, Horan, if we're going to move to the upside. Okay, you can see this consolidation here into the end of the month. So a weak end of day positive candle there as we've moved back up here on the, not that blue candle there, that one there on the end of day. So that was the 23rd. It went long. Your stop loss would be down here somewhere around about 120, just above 125. A couple of candles below. Well, really it should be down there, but and now it's sort of consolidating. So it wants to break. If dollar CAD's going to go high, it needs to break and close over 126 significantly. As you saw here, it did it one day, but it wasn't a big break, and then it went back down. Now we're back down again today. So a break over 126 would be positive for dollar CAD, and then we'd rally fairly quickly, you would argue, to 127. There's lots of fresh air there as we tested it there, but you can see the resistance on the close of day in March has been around that 126.65 level. So that's the 65 pip range there if we break that 126 to the upside. Shorter time frames, 4 hour consolidating around the 200 period moving average, up it, below it, up it. So again, it's another consolidating one. The low got a bit lower though last week, so it was below where the pivot point is at the moment. So the 4 hour low there, 125.65, that's that area we talked about in the daily, wasn't it? And then we need to break over 126 to move up, but that's still channel bound, so down, up, and now it's currently moving down. So again, the pivot point's already been tested. Will we test 125.68 to low? We'll see. But 4 hour going sideways, and 1 hour a bit choppy as well. Up this morning, topped out low, and that's gone short this morning into the pivot point, but a bit of a weak one there for dollar CAD. Remember, obviously the movement in the CAD is very closely aligned to the oil market. We had this huge container ship stuck in the Suez Canal for all of last week. It's been refloated this morning. It's been realigned, so it's actually pointing straight now, and they're trying to get it into a bay where they can get other ships moving. But I was reading over the weekend, 200, 300 ships stuck there. Right, let me just see. There's a few questions coming. I've missed a few of you. Okay, so that's CAD. Bruel, actually, that's very good timing. You're asking about oil. Yeah, oil, let's have a look at what's actually going on in the market. So again, relatively well bid. Big shakeout last week. We went under $60 into the week before last, wasn't it? A huge candle there. Still trending lower here. If you zoom that up, obviously all the machinations last week of the what was going on, but that trend line is still holding, isn't it? You can see that from that. We extend that now down there. There we go. We tested it today, haven't we? So that's interesting, isn't it? So that's our downtrend line, which we're under. Our channel is moving down. So the support for US oil, in particular, sits there at 57.25. So we got a falling flat bottom. That's our support there. And you'd really want to get back over and hold $60 itself to the upside. Obviously choppy because of what's been going on in the Suez Canal, but you can see here chopping around, finding some direction. So 57.25 is that low. We did test last week off it, but not higher. And $60 here, the blue line. We want to hold and break that, and then next target will be 63 really, which is here, and then 65 on the higher time frames. Intraday today's been really, but yeah, there you go. Relative positive today and Friday. Negative news, and then there was positive news. So back up to test our daily time frame. So the upshot of all of that is that oil has rallied has a huge rally from November up to this 60, within 4 cents of $68 a barrel. The Russians have said this morning that they're willing to extend, or that they're making positive noises about extending the production cuts into May as well. So that's probably lifting the oil price as well as the refloating of the container ship. So it's trending to the upside. Dollar yen, please, Jitendra. We've just done dollar yen. Jitendra, were you still here? Jitendra, ask again if I disappear, okay? 4 hour time frame, Haran. I hope I answered your questions. We won't run through them all there, my friend. If not, please ask again. Good afternoon from South Africa. Good afternoon, South Africa. Hope you're well. Hope you had a good holiday last Monday. Celebration of the very unfortunate events in Sharpeville, wasn't it? Hope you're having a good trading week. Gold to be fighting us later. We'll see, Vincent. We shall see. We shall see. Thanks, sir. It's not a problem. That's what we're here for, my friend. Hello, Lorraine, here from Jake. I need a real mentor to teach me how to trade. I am so interested. Lorraine, let me just put my face up. Lorraine, or Lauren, sorry. With any type of trading, whether it's Forex, you need to understand the basics, commodities, equities, whatever you're going to trade. Make sure you understand the basics. Let me put my little head up there. Make sure you understand the basics, okay? So get to our education page, watch the videos, download the ebooks, contact me. You can email me at any time. That goes for anybody. Email me anytime at webinars@hotforex.com. That's the quickest way to get hold of me, honestly. Everybody says, well, it's just a generic email address. It's the quickest way. It gets monitored by the support people. It doesn't get lost in my spam. It doesn't get lost in my inbox, because you can imagine what my inbox is like. So email webinars@hotforex.com if you want some sort of direction. You want some sort of, not direction, but some sort of help about how to learn to trade. Because this business is all about you. It's a psychological business. It's not looking at charts and candlesticks. Obviously, all that helps. Predominantly, it's knowing yourself, managing your risk, managing your emotions. That's the key thing, and that's where most people come unstuck, because we're human beings. You throw money into the equation, and everybody gets far too emotional about it. Money is a simple energy to allow you to do other things, okay? And trading, you've got to be as calm and collected as possible. You've got to manage your emotions, not get greedy, not get too scared. You can't get rid of them. You just got to understand them, bring them from your subconscious to the front of your head, the front part of the brain where you're thinking about it consciously, and manage them, okay? Accept that you lose a lot in this business. Again, most people can't do that. But I say this all the time. I get lots of funny looks at seminars and even online. Lots of odd questions when I say women make better traders than men simply because they accept losing better than we do as guys, because we're full of testosterone, and they manage their emotions better. I know it's the common fallacy that that's not the case, but honestly, when it comes to trading, women accept risk better. They accept losing better, and therefore, ultimately, they make better traders because psychologically they're better designed to do that. We want to win all the time, men, and that's the big problem. Can't accept losing. But anyway, sorry for another day. So come on to our website, Lorraine. Please email me. Please follow me on Facebook as well. And we're here to help, my friend. Okay, so very best of luck, and keep in touch. Hussein, no problem. Thank you as well. Thank you for being here. Bruel, yes, I am all right, thank you, and I'm very well, thank you. It's Monday, sun's shining now. We've had lots of horrible weather here in Cyprus, but the sun's shining today. I harvested some vegetables over the weekend as well. I love growing vegetables. Can't beat a bit of empty-headedness growing the vegetables. Nice to be outside. Nice setup on Kiwi-Yen. Kiwi's weak, Yen's weak. So you would have thought that we're cancelling each other out. But let's have a look. Rosina, let's have a look. I know I haven't got Kiwi-Yen here, but let's have a look at the Kiwi crosses. Kiwi crosses have been. I know Kiwi pound was particularly weak this morning as the strong sterling and some big pip range. Is that my cup? Let's have a look at the other side. That's our. We're currently sponsoring Paris Saint-Germain, the dominant French football team. Well, that's all I'm going to say. So anyway, lots of jersey giveaways. So get on our website. Lots of free merchandise from Paris Saint-Germain and a great competition. If you haven't seen the competition, you get a chance to come to the stadium, watch the training session. Some great first class, some great flights, some great competition. Join the traders competition for Paris Saint-Germain, running for the next month or so. I think it might even be that long actually. So have a look. There's weekly prizes as well. So it's not just if you missed the beginning of it, don't worry about it. You can still join and take part at any time. So Kiwi-Yen, let's have a look. Kiwi-Yen. Kiwi-Yen, 1 hour has started to drift up from last week's low here at 76, under 76. Wednesday, Thursday, Friday, we rallied up. And today we're testing the 200-day moving average, which is interesting, as we say. Oh, hang on, you can't see me, can you? You can't see the chart. You can't see what I'm talking about, Rosanna. So there we go. Let me just go back. So this is the daily time frame. Sorry, no, it isn't what I'm talking about. This is the daily time frame. So we had that big sell-off last week. Huge sell-off last week as we went under 76. So we'd had a nice, strong trend. Suddenly, we got heads up the day before. So we went under the 20-day moving average, under 78. Testing 79.20, double top, intraday double top there, you can see. Fairly, end of February, end of March, double top. So that's far enough apart. And then we moved down, big sell-off and a retrace. So we're still far from 50% of the big retrace, the big sell-off that we had here on the 23rd. Why it did that was probably, a combination of positive news for the yen, which is talk about the yields, and the first starting breaking news about the housing. Oops, you can't see me, can you? The housing issues. For heaven's sake, the housing issues in New Zealand as well. With some more news about that today. So very hot, overheating Kiwi housing market. Always has been fairly hot, but it's some sticky situation for Jacinda Ardern, the Prime Minister. Anyway, daily, 3 days up so far, but still weak. The 20-day moving average sits there at 77.55, so it's still just retracing that sell-off, Racinda. If we go down the time frames, this will look fairly positive as we just had a look. The 4-hour time frame has picked up from this low at 76 last week and moving up, but still under the 20-day, the 50 period moving average and the 200 moving average. So the 4-hour really needs to break 77 to move back higher. Really, the back D looks fairly positive. The stochastic starting to move up as well. So good candle so far, but moving up. On the 1 hour time frame, we're a bit more spiky. We'd rallied 76.80 on Friday. We're over that at the moment. So again, went negative, but supported by the pivot point this morning on the 50-hour moving average. We're back over the 20-hour moving average. So again, that would have ticked higher on that previous setup on the 1 hour time frame. So moving higher, but resistance is the 200 hour. So again, 76.90 is the key line in the sand, Racinda, for that pair today. Brandon, good afternoon from Taiwan. What was I reading about Taiwan news last week? Something about I can't remember now. It'll come back to me. Brandon, let me. There's some really significant news from Taiwan, wasn't it? It wasn't nuclear arms, was it? It was something they were, standing up to the Chinese, I think. But anyway, Brandon, good afternoon to you, sir, or good evening, as it is for you. Reen, hello, Reen. Pound yen on the 1 hour. So guppy on the 1 hour. I haven't got it here. Let's have a look. Again, I would imagine that's fairly positive from what's the vibes have been going around today. But remember, with the guppy guys, Reen and everybody else that trades these sterling crosses with these long ATRs or these big ATRs. Obviously, watch as well. So that went long. I mean, it's been long. Thursday, Friday, it went short this morning, and then it's gone long on this crossing strategy here this morning. At 11 o'clock, around about 151.24, and it's long into R1. It's finding obviously some resistance here today, intraday, at 151.88, Reen, but that's still positive. That I don't know when you got in this, but again, from a 1 hour point, let's zoom this up. You can see that we're above Friday's high, which is positive. Our Friday closing hour candles was around there at 151.46, so that's your key support level. It could easily retrace into that 151.45 and then move back down to the pivot point. Or alternative view is it breaks R1 and keeps bid. R2 would take you to 152.50. Okay, so it's still up. We've already, from the trigger here over the 20-hour moving average, we haven't moved that far, to be honest. We've moved 49 pips, and the ATR is 25. So it's already moved 2 times the ATR from the break. So many trading this to the upside would have probably bagged their profits already and watching R1. So R1's your key resistance, and you could trail that up, or you stay long until the 9-period EMA, which is one of the rules here, breaks, and that's currently at 151.38. But still positive on the 1 hour, Reen, my friend, and the 4 hour. So what the higher time frames doing? The higher time frames remain positive. The 4 hour, so you're with the trend. The 4 hours still up, and again, there's that R1 level, and the daily will still be positive as well from the dip down last week. We've had a strong Thursday, Friday, and today so far. So again, on the daily time frame, we've got key resistance at where R1 is there today. So it's a big, strong daily resistance. So some shorts getting put on there, no doubt. We've got some intraday 5-minute or 15-minute pin bars as that rejects that. But two strong candles, and see how we finish today. A bit less emphasis today, but certainly to the upside. So daily's positive, 4 hours positive, 1 hour is also biased to the upside. I'll be going, absolutely. Brandon, risk management key to surviving? Absolutely, my friend. It's my mantra. Brandon, come and join me at one of my seminars. I don't know if I'll get to Taiwan, but absolutely. And again, Brandon, you've probably got quite a lot of experience training. I don't know, but yeah, absolutely. Risk management is all, guys. Get any risk management book, but the best risk management book, the best psychology book, really, is anything by Mark Douglas. Mark Douglas, Trading in the Zone, absolutely priceless for understanding yourself, and a great introduction to risk management. Lauren, yes, I think men just are that in general. So, Lauren, are you a lady or sorry, I don't recognise this. That's a man's name or a female name, or non-gender names we have these days, Lorraine. But yes, it's all about physiology as well. Remember, women were designed to produce the next generation. But I thank you, sir. I will. Very good, Brandon. So Dixie, the Dixie dollar index remains strong. Let's have a look at the dollar index. Remember, guys, this narrow-weighted index, the dollar index, the USD index as we call it, or the Dixie as Brandon's called it here, it's a weighted index of only six currencies against the dollar. So it's got the CAD, it's got the sterling in there, it's got the Swedish crown in there, and also obviously key the euro. And the euro's most heavily weighted of the six. It's nearly over 50%. So as the euro's weakened, obviously the dollar index itself has moved up. So we were here at 92.92 earlier today. This is the 1 hour time frame on the Dixie. See, we're consolidated at highs on Friday. We're up again and holding high here Monday. Support is at the pivot point there at 92.75. Resistance is first resistance at 92.85, but really that new high from Thursday, Friday at 92.90. So obviously that's within a smidge of 93. So again, if we look at the daily time frame, it's had a very strong March in particular, but it's had a pretty good 2021 as well. Here, this is the beginning of the year. We were down here at 89.50, 89.15. We touched the second trading day of the year. We rallied, then retraced, and then rallied, and then retraced, and rallied again. So again, no one for your fib traders. Breaking above that recent high, and off we go. 93 is the next big line in the sand. And again, another one that's over its 200-day moving average. And I can't emphasize how significant that is, both technically and emotionally and psychologically for traders, the 200-day moving average. And it broke it on Thursday, held nice and strong, retraced a tad on Friday. But again, you see engulfing candle. It's engulfed by the 3 move up. The retrace wasn't much, and we're moving up again today. So dollar index remains bid. Remember, it's all this, as I say, we're into the end of the month period as well now, so watch that as well. Very good, Lauren, my friend. Regan, is the pound dollar bull market going to run long? Is the pound sterling going to run long? Well, sterling is certainly appreciating since most of the years, from the sort of end of November, January, December through the rest of the year, as basically because it's pressured down, undervalued. Remember, it's always, when you're trading currencies and anything for that matter, it's always relative to where it's been. So the sterling was under lots and lots of pressure because of the uncertainty around the Brexit situation, the politics and the economics surrounding that, the uncertainty of a deal with its major trading partner, which is was Europe, its closest physical geographical partner. That all got sort of resolved for goods anyway at the end of last year. Well, how good or bad the deal is, markets aren't really interested in that in a sense. They just wanted the clarity and certainty, because markets hate uncertainty more than anything else. And so sterling's recovered quite significantly. So your big question is the cable bull market going to run long? Well, it's who knows. At the moment, it's still weak, isn't it? It's daily time frame, I would say, because to answer your question in simple terms, Reagan, for me, the major line in the sand remains the 20-day moving average, which sits there at 138.70. So we're at 138.20 now, so still 50 pips away on an end of day basis, but we haven't been able to hold over that key level any particular time. So we did it for one day here on the 11th. We we closed right on it there on the 17th, and we've been moving down. So really, here for March and February, the highs have got lower, the lows have got lower, but we did bounce quite significantly off 137. So bull is getting a bit carried away. But if we zoom this in, or out, I should say, we've had a very strong run. Since I said November, December, January, also not all-time high, but a new high here at 142 intraday at the end of February, and we just cooled from that level. So is it a bull? Possibly. No, sorry, it's not a bull. Not sort of, it's turned up the last 3 days. You could argue that's a three white crows as it's retraced from the bottom, but certainly your support or your stop loss needs to be around there on an end of day, still at 137. So it's 100 pips, but it's moving up. But really, for me, 138.70 to turn that into a up market, Reagan, to answer your question. Simply enough. It's so fascinating how you read the chart, Lorraine. It's my interpretation, that's all it is, and everybody has their own interpretation. That's the beauty of technical analysis. There's no, well, there are right and wrong ways of reading the charts, I suppose, and interpreting, but it's what works for you. Okay, just because I've got moving averages and the stochastics and the MACD and ITR and RSI on here doesn't mean that that's the right sort of indicators for you. Lots of people trade off, as I mentioned earlier, just pure price action. They're and scalpers. They're still, even if you're scalping on, the tick charts or even, 1 minute, 30-second charts, you can still apply technical analysis. You can still apply rules. And indeed, you have to. All successful traders have rules. They follow their rules. They follow their risk management, as Brandon said earlier. It's absolutely fundamental, whatever time frame you trade. But more importantly, you trade a time frame that fits your personality, your lifestyle. So there's no point in trading an end of day chart if you want lots of trades during the day. You've got to wait till the daily candles finish before you make a decision. Equally, there's no point in trading 5-minute charts. Look, that's a let me demonstrate. That's a daily chart, and it's sort of going down. That's a 1-minute chart of the exact same asset, and it's also going down. That chance of a coincidence, but you can still apply the same techniques. Obviously, your stop loss and your targets are much, much tighter on shorter time frames, but you're making more trades, aren't you? So if you're that personality that needs to be in and out all the time, consider the shorter time frames. If you're the sort of person that hasn't got the time or the energy or the inclination to trade all the time, remember there's lots of costs involved in trading as well, potentially, if you're trading with commission, if you're trading a zero spread account, because obviously as a business, remember we're a business as well, we make our money on the spread. So, and obviously other charges as well. But you got to balance it all up, and there's no rush. There's another thing. Lots of people rush into this market, Lorraine, and try trading too quickly. Keen to deposit their money, keen to get going, because that's how the business is done. That's how it's marketed that way by brokers like ourselves, and obviously affiliates and partners and all the rest of it. But it's your money. You got to be responsible for it. We're all grown ups here. It's serious business, so take it seriously. And anybody can lose money, and anybody can make money as well. That's the thing with this business. It's really not an intelligence thing at all. It's an emotional intelligence rather than intelligence. So anyway, so you are female. Okay, all right, there we go. Yeah, I hope what I've said rang true with you. Haran, I only trade in a 1 hour and 4 hours, so can you tell me the USA 30 on that point? Right, okay, my friend, certainly can. So look. Let's have a look at the DAX. Have a look at the DAX for ages. So the German 30 chart. Again, only 30 companies, quite sensitive. Some big companies in there, world-renowned, people like Volkswagen with his great story about their electrification. So DAX certainly there on Thursday, ran into the daily, this is the 1 hour on the DAX here, into that 200-hour and rallied up there. I can't see. You can't see me. It doesn't matter, does it? So DAX is up and over the key 14,500 level support down here. You can see that. You can see that, can't you? Yes. You just can't see me. Strong Thursday, strong Friday. Gapped up, not gapped up, but gapped down on open because of the worry about this hedge fund. Credit Suisse hit very aggressively. Nomura hit very significantly. The big Japanese bank, 16% down on the close of the Nikkei this morning, and also Deutsche Bank. Deutsche Bank less exposed, but Deutsche Bank a key component of the DAX, which is why we gapped down on open this morning. So if we zoom up, you can see relatively bid. So on the daily time frame, again, the German equity market, the DAX remains bid. Consolidation sideways for a while, but a strong day here as we bounced back off the 20-day moving average. The first break back over it from the move down was here as we went back over 14,000 right at the beginning of March, and it's been relatively strong all the way. So just, lots of volatility in the equity markets, but the DAX is still moving up, taking in its stride all the negative stories with regard to the vaccine and the virus in Germany, the vaccine rollout and the AstraZeneca stories. Mrs. Merkel over the weekend was talking about taking control over from the states. The federal government in Germany taking control over the states, very much like the United States of America. Germany is very much devolved to the federal level, but Mrs. Merkel's talking about taking command. Remember, Mrs. Merkel, very, very well, highly regarded politician, retires next month, not next month, month of next May. So who's taken over from her, it seemed deemed to be set in stone, but that's all up in the air again now, so uncertainty over that one. But DAX remains bid there on the daily. The 4 hour, which is what you talked about, is strong from here. The big strong candle there from the 25th. When was that? That was last week, wasn't it? So that remains bid and to the upside. So even for 4 hour traders are on that strong. First resistance is that daily resistance day at 14,900. So for a 4 hour trader, really, 15,000 comes into play as well. So that's been bid for all those candles. As far as 1 hour traders concerned, that went long again Thursday, and you've been long ever since. You might have closed out this morning from that, see what was going on. But really, the 1 hour today is waiting for some news, but still relatively biased to the upside. See how the 20 hour is still held. So a break of that would take us under the S1 and then down to the bottom of the Bollinger Band today and S2. But again, even 1 hour is still relatively sort of biased to the upside, but very much consolidating. Not a lot. It's a tops and bottoms really. You'd have to go down to the lower time frames to try and find the tops and bottoms. But support is the pivot point. Then the bottom of the Bollinger, then the 20-hour moving average, and then the S1 level. So 3 levels there to watch. Above that is the top of the Bollinger Band at 14,859, so 14,860. And then R1 itself at 14,907, as we said, for that one, my friend. So watch that later. Again, not a great deal of data, as I said. Euro dollar bearish because Dixie is straight. Absolutely, Brent. That's what we just said before, didn't we? Hello, Namibia. Hope you're well. Never been to Namibia. I'd love to go to the Namib Desert. It's fascinated me for years and years and years in Arbid, Brendan. Love to meet you in Namibia one day when things get better, and hopefully it'll be sometime this year. Brandon, when trading euro dollar, play close attention to Dixie because euro weighs 6%. That's what I said, Brandon. Absolutely. Dixie, not a lot. It's not a chart many people trade, Brandon, but it is key. A driver for, not a driver, but it's a key indicator of the strength of the euro as well. And obviously, watch, as I said earlier, watch the CFT futures reports on Fridays as well. See where the futures markets are as well. They're the real markets when it comes to trading as well. Could you please enlighten me on the difference between, for example, between EU, Euro, and Dixie? Euro. Well, Bruel, let me just put Brandon's, unless Brandon's answering your question as well, Bruel. The Dixie, the DXY, or the USD index, is a index, okay? So it's composed of different components, and the 6 main components make up the Dixie. So it's a percentage, basically, of cable, so pound against the dollar. It's a percentage of the euro against the dollar, the CAD against the dollar, the Swiss crown against the dollar, the Swiss franc is the other one, and another one escapes me. I can't remember which one I've missed out. I'm sure Brandon can fill me in. But the key one, as Brandon said, is the weighting of those 6. They're not all equally weighted. It's the dollar, it's the euro dollar. The euro is equally weighted. So we've got a weak dollar, weak euro, and a strong dollar, so euro dollar's going down. Equally, we've got the Dixie going up, the US dollar index, because 60% of the price of the dollar index that we see here is based on what the euro dollar's doing. That's the difference between the euro and the euro dollar. Obviously, the euro, when we write it like that, Bruel, is you mean the euro against the US dollar, okay? And obviously, you can trade the euro against lots of other currencies, okay? And Brandon's, I think he's obviously answering your question there, I think, so that's why I'm coming in here. Brandon, there we go. I'm late to the questions here, guys. I'm 2 minutes behind you. Brandon, you're welcome, and thank you, Taiwan. I used to find Forex intimidating, but no, it's all I think. But now it's all. Now it's all I think. Lorraine, don't make it all you think about. Okay, trading shouldn't be all you think about. Okay, it should be part of what you do. You know, if it fits in with your mentality, it fits in with your psychology. You can. You can make a success of it, but equally, lots of people don't. Lots of people don't spend time investing in themselves, learning, reading books, following courses, and they jump in too quickly. So remember, as I said before, it's your money. You've got to respect it and you've got to protect it. And again, that's what a lot of the professionals do. They, before they open a trade, they will know how much they're going to lose if they lose the trade. Absolutely guaranteed. Read any trading book and they will, virtually guarantee that that's it. Once it gets to X level, once I've lost X amount, whatever it is, percentage, I always recommend, a percentage, 1 or 2% of your account on any one particular trade, get out regardless. And then, if it's winning, they just either add to the position or let it run, then move the stop loss up if they're trend following traders, or re-enter or get out and then get back in. Add to their position. Lots of different ways of trading, but you've got to find the one that works for you, find the time frame that works for you, and just accept the risk. Accept that you lose a lot. As I said before, most people can't do that. I won't accept that, and then you can move forward. So, Lorraine, nice comment. Thank you very much. Great question, Ron. How to trade the VIX? Well, lots of people get hung up about the VIX, Harun, but there's no need to. The VIX is just like any other index. The beauty of it, really, is it's quite volatile. It's quite volatile. It moves around a lot, okay? However, a word of warning, make sure you're trading with somebody like us, Hot Forex, with the VIX.F, which is what we can trade on your MT. You need an MT5 platform to trade the VIX with us, okay? Be careful of other brokers. I'm not going to start slagging other brokers off or anything, but be careful of trading synthetic indexes, things that are made up by a broker that are not correlated or related to a real index, okay? So things like the VIX 50, VIX 75, or VIX 100, or whatever they call them, they create these indexes from very volatile assets that mean that their pseudo VIX, their pseudo volatility index, moves around a lot, and it looks quite sexy when they're marketing it, and it looks very sexy, when people are making lots of money. But just because it's moving up a lot and down a lot means it's volatile, which means there's a higher chance of losing. So be careful trading anything like that. If you want to trade the VIX itself, watch my webinar on how to trade the VIX. But it's really like any other asset, and I haven't actually got it here, but it's you trade it like you literally trade it like any other asset. I can't share my because we're live. I can't share my unfortunately I can't share my VIX platform, Haran. But trade it like it. Have the whatever strategy you're using, whatever indicators you're using, or not indicators, or whatever time frame you do, you can trade the VIX similarly. Okay, so don't be afraid of doing that. Okay, this happens to be the dollar index, but it's just another index. Okay, but the beauty of it is it does move around much more than some of the other indexes. As I said, the VIX on Friday was down at 21.4 on the close, 4%, big 4% move, and it's moved all of that back today with the uncertainty with regard to what's going on with this big fund manager and the big hit on the banks, Credit Suisse, Nomura, and Deutsche Bank to a lesser extent. So we're still 25 minutes away from US Open. Where are we? How to trade VIX, Ron? What's your trading style? My approach to investing, trading has always been, follow the trend. I'm a trend following sort of guy. It's just the way it is. Trends can run and run and run, and you don't need to get too uptight about being in and being out all the time. But my approach is end of day sort of stuff. Others have different approaches, but very much a trend following type approach. Which is the right MACD to use, Kim? I don't know what you mean, the right MACD to use. The MACD is the MACD. The MACD is the Moving Average Convergence Divergence Tool. I know what you might be meaning, the right one. Here, let's just make it huge here. So this is the MACD here, Kim. Can you see it here? Okay. On many platforms, on the MT4 default platform, it looks like this, unfortunately. On other platforms or other packages you can have the two crossing lines. What you've got here is the histogram. The histograms are the lines pointing up, okay? And that's the difference between the moving averages that create the MACD, okay? If you're talking about the settings, the default setting, Kim, I'm just going to take your question off, okay, so you can see the settings. The settings are here. I don't know, if you can't see that, let's move that. Make that down. Can I make that bigger? I can't. Let's open a new chart, okay. Let's open a new chart, just a simple euro-dollar chart on there. So if I get rid of the grid, I hate the grids. Anybody like the grid? I don't like the grid. So let's just insert, indicate. Let's insert the MACD. Where are we? Oscillators. Where's it gone? Where's the MACD gone? There it is. So this is a standard default, Kim, and everybody else is interested in MACD, okay? So it's a combination. So the MACD, the Moving Average Convergence Divergence Tool, normally the MACD is in line with what a trend is doing, but when it diverts, that's what the MACD is quite good at, overbought, oversold as well. So typically the default setting, and most people have it set like this, you can play around with it. The fast EMA is 12, the slow EMA is 26, and the MACD simple moving average, these are two exponential moving averages. They then have the simple moving average, which is set at 9. So 12, 26, and 9 are the default settings, okay, regardless of what it looks like. So if we enter it, what you can do with some packages, and you can get little executables to make this run for you, excuse me, we'll give you two lines down here instead of this single line. So the red dotted line here, if you can see it, is the, can you see that? I don't know if you can see that on that black chart. Let me just change the colour. So change that to yellow. You should be able to see it better, I think. Okay, close. Okay, can you see that? There we go, the yellow line. So this is the signal line, okay? Lots of ways of trading it. The key, as you can see here, the line here, I don't know, this is the euro on the one. So here it's sideways, but here we were moving up. So the bias to the upside here, we've had the signal line crossing the zero line after this huge move here. So it is lagging because it's a moving average, and it's moved up here. go to the daily. So as you can see here, on the day, this is the euro on the daily. You can see that the signal line here for the euro has been under the zero line since the end of January. So again, net relative, it's zoomed up, but didn't get back over the zero line. So the zero line's key. The slope of the signal line's key, and the height of the histogram lines are key. The histogram bars are key as well. So here we got a bit oversold, then we come back. Now here, now we've got the signal line, or the histograms above the signal line. So we're perhaps pushing, these lows, these one under 118. So we're perhaps, looking for some sort of support. But as you can see, you want the moving. So that's the default setting on our MT4 and MT5 setters. You can get little executables that instead include a histogram. You can have two crossing lines on it as well. If that's what you meant, Kim, I'm not sure if that. I think that's what you meant when you say what's the best. What was your question? What is the right MACD to use? Again, it doesn't matter. The MACD, as with all indicators, varies with the time frame that you're trading. So, but the default settings are 12, 26, and the simple moving average set at 9. So the fast and the slow EMAs 12 and 26, and the simple moving average set at 9. Okay, hope that's answered your question. Get rid of that. There we go. Hope that answered your question. Lauren, how long does it take for someone to learn Forex? Well, it's like learning, it's constant learning, Lauren, because as I say, it's understanding yourself. But once you understand the terms, euro, dollar, spread, leverage, margin, don't be afraid to keep going back to relearn those. But you've got to get those basics correct. You've got to understand, how the spread can vary from during the day, from certain times of the year as well. Sometimes whatever's going on, look at the volume in the markets. Forex is a very volatile, highly risky market, so be aware of the risks involved. Be aware of how quickly things can suddenly turn around for you. So get all those basics right and keep learning. There isn't really end date in mind, and don't try and put pressure on yourself to I've got to learn all this. But the basics you should be able to pick up quite quickly. Understand what spread is, understand what leverage is, how it works, both positively and negative margin. The major Forex pairs, that everything's traded in pairs. The issue with dealing with the exotics, what exotics are, what miners are, that sort of thing. But find something that works for you. There's lots and lots of options. I typically monitor about 40 different assets on an end of day basis, including most of the major Forex crosses. Some equities, some indexes themselves, oil, gold, silver, those sort of markets. So join me tomorrow, Lorraine. We've got a live webinar tomorrow, 2 sessions tomorrow. So join me for one of those, and we can have a look at the charts in more detail as well, like we are doing today. Brandon, gold, please. Brandon, I don't know if you were here earlier. How old is this? 12? No, you've just asked. So let's have a look. Gold was, I couldn't get really excited about it, to be honest, Brandon. It's been moving lower all day. This is the 1 hour time frame. Brandon, I don't know what time frame you're interested in, but certainly it went short here this morning at 7 o'clock under the 20-hour moving average, but not really trending, is it? It's sort of going sideways, so be careful with the moving average. But here, at least, they'd started moving down. The 5 and the 9 had crossed. We were under the 20, even though the 20 was still moving up. Here you can see it's crossed under the 50. I don't know if you can see that, but that's the green line going under the blue line in this current hour while I've been chatting. And we talked earlier, didn't we, the S1 level being support, 123.50. Well, we've been under that in this hour where I've been talking to you guys. And here we are into the next hour. And I said I was going to call it a day and an hour. I am going to stop in a minute, guys, because my voice is going. And let me just go back to Facebook, see how many more questions. Esther's asking about I can't see all your... Oh, yes, there's only 11 questions. There's only 11 I've missed here on. Esther's asking about oil... oil. The oil, US oil .s. Okay. 1 hour. It's sort of chopping around, Esther. I'll come to oil in a minute. Good afternoon, South Africa. C-Bar. Good afternoon to you. I got Rose. Hello. Let's just have a quick. See any more comments? No, that was last a minute ago. Okay, so. Oil, Esther. I don't know if you're still here, Esther, but we'll have a look at oil for you as well. Brandon, So I've got euro dollar, and Brandon's saying he's been. Let's have a look at gold. So gold here on the 1 hour, trending lower, needs to close under S1 if it's going to go lower. Obviously trending down. It's already, as I said before, it's already made 2 times the 1 hour ATR. So many would have already been out of that. But there's no reason to be out of it, because we haven't closed back under the 5 period moving average, and we certainly haven't closed back over the 9 period. So that's still trending down. The 4 hour is lower as well from that this candle here at 10 o'clock this morning, and the daily is stuck sort of going sideways, as we said on the 4 hour. That triangle there on the 4 hour here would take a target from earlier on last week down to about 1700 again. So we're at 1723 at the moment, so still biased to the downside. Brandon, sorry. I've been trading for 2 years and started trading Forex when I was 18. Very good. Very good. So, Brandon, tell me, you said earlier to everybody about risk management. Is that the one key thing you would tell yourself 2 years ago that people need to learn, new traders need to learn? What's the one thing if you've been trading for 2 years and you're still here and trading your own money, I assume you are, tell me what's the one thing you would tell new traders, people that haven't never traded before? I look forward to your answer. If you had to say it in one sentence, I look forward to that, and I'll wrap it up when you get back to me. Right, Ebony, final request. Let's do these 3. So euro, pound, dollar, yen. Good morning, Ebony. And what was the other one? US oil. So, right, these last 3, because I am hoarse. It's Monday afternoon for me. I know it's Monday morning for you, Ebony, but let's have a look. There we go. I'll put that up in a minute, Brandon. You're the man after my own heart, my friend. Risk management is key to success. Absolutely. And never, ever forget that. And once you get that, Brandon said, Ebony, Kim, Riddell, all of you that are still here, it really is absolutely fundamental. Once you get that risk management is key, you've got it. It sticks there, and you think differently. Read Trading in the Zone by Mark Douglas if you haven't, Brandon. I strongly recommend it. Anyway, Ebony, euro pound's been weak and approaching 85 last time we looked. I don't know if it's bounced off that level, but it's approaching a 1 year low, and I've lost euro pound again on this chart. Why does it do that? Where's my euro pound gone? Right, just bear with me a second, chaps, ladies. There we are. So there we are. We've bounced off our low this morning. We didn't get to 85. We've bounced off S2 so far, but it's still weak. Again, Ebony, I don't know what time frame, but that's weak still. It's turning round, but it's still weak. 85 is calling, you would argue. 4 hour remains weak from this morning. Big sell-off. It was all to do with positive stories for sterling. England and Wales opening up. Wales opened up on Saturday. England opened up a bit today. 6 people allowed to meet outside now from 2 different households. Prime Minister Johnson also talking, cranking pressure up on Europe with regard to the AstraZeneca. Quite jingoistic, as you might expect from Johnson. About AstraZeneca being invested in by the government, blah, blah, blah. But really the problem is in Europe, the infections are still going up. Lockdowns are getting tighter, if anything. Germany, Italy, France, Eastern Europe in particular is a bit of a big hotspot. And so the Easter weekend, which starts this weekend, obviously it's Catholic Easter this weekend. France, Germany, eastern parts of Europe, very, very driven by Catholicism. Orthodox Easter is still 4 weeks away, but so Friday's not a trading day for them, although NFP is obviously open. So key holiday being missed again. So still pressure to the downside. So euro pound basically trending lower, Ebony. And as far as dollar yen's doing the exact opposite. It's trading higher. As we said earlier, while you were probably still having your breakfast, we broke that 109.20 as we mentioned last week. A strong Thursday, strong Friday. This is dollar yen on the daily time frame. Strong close to the week. 4 hour remains bid. Strong close into the Friday close, and we're sort of still holding up over 109.50 now. First resistance is 109.90, and then the big psychological 110. So again, bid to 20 period moving average there on the 4 hour chart is down there at 109.28. And the 1 hour chart sort of consolidating, but above the pivot point, above that 109.50. The high on Friday and an end of hour base was that 109.80, which is where the top of the Bollinger Band is. So that's our resistance today. Support is the pivot point now, 109.50. But not a lot of action to drive either of those yet for the rest of the day. Brandon, Brandon's been training for 2 years, he told us earlier, and his key message he would tell himself 2 years ago and any new trader is risk management is key to success. He's absolutely correct, and I can't agree with him any more wholeheartedly. Bitcoin, hang on, what do? We did oil, and we didn't do oil for Esther. Let's finish with oil. Let me see some more questions. Have you heard of future BTCS World? Joe, I don't know. Not today. Let's have a look. Contact me separately. Euro, yen, please. I see weakness, but don't know what to expect from today's move. Well, Euro's weak, basically. It's the end of the quarter as well. Remember, the yen's also relatively weak. I'll come to that in a minute. Inspiration, Euro, JPY. Brandon, you do sound like you've been listening to lots of my seminars, because Brandon's also put on here. Have a trading plan and follow it. Yes, stick to it. It's very easy to break your trading plan, but have a trading plan. Understand what it means. Don't make it too complicated. Don't make it too simple either, for that matter. Don't just write, I want to make money. Have a plan and implement it. Have some targets. If you've got a pip target for today, you get your pip target, get out. If you have either winning or losing, stop, finish, go away. If you're an intraday trader, be prepared to lose, basically. Bruel, I started trading forex last year in September and had knowledge years ago, and I'm winning, and I am winning though. Very good. You are winning. Is that good? So tell us again, Bruel. You tell us what you've heard. Right. Oh, Bruel's saying something that works for him is the harmonic pattern and technical analysis. That's all. Yeah, there we go. If it works for you, it works for you. You don't have to overcomplicate things. Lots of people overcomplicate and add things, change time frames they're trading, they change the assets they're trading. If it's working, why change the wheels? Don't get too greedy, don't get too scared. Obviously you're trying to improve things all the time, but if you're making money from it, that's great. Most people don't, Bruel, so well done, my friend. Right, oil and euro yen, and then I'm definitely going because it's 4:30, been on an hour and a half. Right, final two charts. Oil, as we said earlier, this is that downtrend we identified from the beginning of March. So we've rejected $68. We came within 4 cents of 68. The key line in the sand, Esther, is the $60 level, okay? And we've been above it most of last week with all this fuss with regard the shutting of the Suez Canal, lots of backed up oil tankers, lots of backed up containers. But Russia today have said they're willing to extend the noises, not actually said this officially, but noises that they're willing to extend the cap into May. OPEC meet next month, obviously into April, about future caps. So the trend remains sort of to the downside. We've got key support at 57.25. It's a long way down, but that's 57.25. But really the closest support where today's pivot point sits is around $60. So above $60 positive, under $60 is negative, really, in the high time frames, okay? So the 1 hour time frame you were talking about, very choppy today because of the news flow with regard to the tanker and the Russian news. So we went down this morning, didn't really play out under $60. We're back over $60. That went long, and then it's gone short again. So lots of driven by the news. But again, as I said earlier, I don't know if you were here earlier, Esther, but really it was the, we ran to that daily, that's the daily trend line. So that's a classic intraday pin bar there on that 1 hour there, rejecting the trend line, the daily downtrend, and then we've moved down since. So moved up quite nicely. Actually would have triggered here, and might have got a few dollars out of there, but it's probably been stopped out, didn't get to your target. You could have had your target there at that trend line. That's certainly where mine would have been, knowing that that's already there. And now looking to go short on the 1 hour time frame, but we're only half an hour in. Eric, I have done Aussie, I'm afraid. I'm going to call it a day if you don't mind, Eric. My voice is going. But the Aussie, very quickly, still trending up from Friday, still moving higher. Aussie in demand as risk comes back in. 67.58 would be my resistance today. 4 hour also started to move up end of last week and moving up now on that last candle. That's quite strong, but it's already gone long tentatively last week here at 8 o'clock on the 26th. So 28. So on Friday, sort of tentative long. It still remains long on the 4 hour. Okay. Re must be subscribed for harmonic scanner, please. No, I don't know what you mean by that, Rena. You're talking about, be careful about paying for any information, Reen. That's all I'm going to say. I don't know who you're speaking to. Harmonic scanners, you don't need a pattern, but there's people will sell you high harmonic scanners. But more importantly, as Brendan said here, have a trading plan and follow your trading plan. Right, finally, Euro Yen, and then I'm going to go. Okay, hope you don't mind, but I need to do other things today. I'm sure you appreciate. And tomorrow, we're going to do this again tomorrow, but you need to register for the webinar tomorrow. So tomorrow, twice tomorrow, 11 o'clock and 1300 hours tomorrow. So 2 o'clock and 4 o'clock Cyprus time, I'll be live on the webinar. So join our webinars and we'll talk about it in more detail on the daily time frame in particular. So Euro Yen, who's this asking about Euro Yen? I've forgotten. Anyway, sorry, I've lost you, Euro Yen. Who asked about Euro Yen? I apologise. But who was it? I'm sure I saw Euro Yen. So let's just do Euro Yen and we go. Right, Euro Yen on the daily time frame. Nice long trend, positive trend. Went short last week here. Big down candle last week. Under the 20-day moving average, so certainly closed out that long here, or a day before, 2 days before we went under the 20-day moving average. Turned short, didn't want to go any lower, and it looks like it's going to move up. So sort of consolidating, needs to break 129.50. Really, not 129.50. What I'm talking about. So to retrade, to get back positive, we need to close over the 20-day moving average at 129.40, say, and we need to retrace 50% of that big down candle, which we didn't quite on Friday. So we got support certainly at 128.40 is your support, resistance 129.25. So moving up on the daily time frame. 4 hour will be a bit more positive. Yeah, indeed, it moved up on Friday, moved down again now. So 4 hours still sort of bid. We got support here, that 200 period, the 20 period, and the S1 there. So 20 period is held at 128.90, so 129's key 4 hour, but we need to move higher again. We need to break that previous fractal high at 129.45, so moving up from there. And 1 hour will be relatively negative and positive. Yeah, there we go. So chopping around a bit. That's ticked higher again now. Enough to take a long position there at 4 o'clock, half an hour ago, but it's maybe run out of steam. And that resistance there we just talked about there at 129.45 from earlier on today, and Friday's high, that was a few pips high, wasn't it? 129.45. So that's Euro Yen. So that's all for now, guys. Thank you for your time. Thank you for staying here for those of you who've been here for a long time. I know some of you have. Let me just leave you with Brandon's comment there. Always have a trading plan. Well, and that when I asked him before about, I don't know if you're still here, Brandon. The other key thing he says, again, a mantra of mine is risk management is key to success. So thank you, everyone. Join me tomorrow on the webinar at 11 o'clock GMT, and we'll see you then and again at 1300 GMT, so 4 o'clock, 1600 Cyprus time, and 2 o'clock Cyprus time for 2 live trading sessions again, but on the webinar rather than here on Facebook and YouTube. So take care, everyone, and all the very best.